The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. So start the show with what was going on last night. I posted this long before it happened, but this is what happened. We were looking for this pattern. I sent it out real early in the morning when we were just right after the close, and I said there were double ABCDs up there at that 42.52 area. The high was 42.58. The stop would have to go above there. Of course, the stop is lowered quite a bit by now, but you can see there's double ABCDs there that are very, very interesting. I've had a request now for several different things here that are a little off the beaten path, and I want to bring one of those up here right now, which happens to be the British pound. If you give me 1 second, I'll get this chart up, and we'll be looking here. I have good news today, folks. I don't have to go to Dubai. We're going to do a live, Tom Hugard and I are going to do a live presentation on webinar to some bankers in Dubai. But this is the British pound, folks. As you can see, this has been decidedly bearish for a long time. I wrote those. You can see the little marks that I made here where the 382 patterns came in. This is where we were in London here on April the 1st. 2nd and 3rd, we were trading there. We were right at that 382 retracement there. And at that time, you know, even in the newsletter, we were talking about it, that we were going to get down to that 125 level. And as you can see, we shattered that to the downside. So all that's telling you is, folks, is that the trend is down, and you watch for 382 retracements. Sometimes they work, sometimes they don't, but that's the main thing that you want to be, paying, really close attention to. So just keep that in mind as you're looking at some of these charts here today, because these, they're good for predicting, but by golly, let me tell you one thing, folks, they are not 100%. Our guest today is Shane Smolian, the wolftrader.com. He'll be on with some really great stuff. Tomorrow, we're hoping to have J.C. Parrots of All Star Charts will be on, and that'll always be a really interesting one. Okay, now I wanted to get back here. I had a question from someone about the GDX. Unfortunately, the part of the chart has been obliterated by my technical skills, but you can see where we are now. The main thing that you're looking at here, you see we've had this big sell-off here. Folks, I think we're going to get all the way down to this level, way down in here on the GDX, so I would not buy it. There's several reasons. We're right at the 61% retracement. The risk there is very small if the person wanted to do it, but I'm not interested in stocks. But that's what I said, if you're going to buy it, you put a $2 or $3 stop on it and let her rip, because maybe it works, maybe it doesn't. But the only thing you've got going for you there is you've got that 61% retracement. The trend is certainly up, but you've got these gaps and this big wide-ranging move down. That'd be enough to scare me out of it. So that's what I'm paying attention to as I look at these. So let's keep a close eye out on this one, because it's going to be, very, very interesting to look at here as we look at some of these charts here this morning. Okay, now let's get back. We've got a couple other things that are very interesting here on the technical scale, because, they have a really good idea of what's happening. And one of them, boys and girls, believe it or not, is one of our favorite trading things that we haven't been in for a very long time, and that is nothing more than our good friend live cattle. This happens to be the June live cattle contract. Folks, this is so technically perfect that you just can't imagine how beautiful it is. Look at the left shoulder right over here. Look at the right shoulder right over there. That is a technically perfect head and shoulders pattern with an ABCD Gartley in between, and it's already broken 8 cents. Now, maybe it goes lower, I don't know, but that's a perfect setup. I saw the Gartley. I missed the head and shoulders pattern. That was brought to my attention by one of our friends across the pond, way across the pond over in Spain, in Malaga. And you'll notice here, but the difference is in Andrew Lowe's book, the non-random walk down Wall Street, when he looked at all these patterns, he made them be mathematically perfect in order for them to be a pattern. He looked at 800,000 patterns over a 32-year period from 1972, from 1972 to 2002 in stocks and New York Stock Exchange, the NASDAQ, and one other, American Exchange. And all they did was they said, in order for the head and shoulders to be perfect, is you've got to have the symmetry between the left shoulder and the head. And as you can see, that is correct. And if you look at the head to the right shoulder, that is also correct. You got in other words, the time distance is perfect, and you're setting right at an ABCD, 786 retracement. Now, he didn't look at 786 retracement. He just looked at the pattern itself. What we do is we put the numbers in, and that tries to give us a little bit. Now, you see we've come down, and what we're forming now, folks, is nothing other than the 1, 3, 5 pattern. That's what you want to be paying close attention to as you look at these things here this morning. So I hope that makes some sense to you, but we'll have to wait and see how things are going before we get moving on to something else up here. Okay, now I have to tell you something else, folks. I'm going to do something off the cuff here today because something just dramatic has just really happened. I don't know if it's going to mean anything or not, but I wanted to bring it up to your attention. Hold on here. Oh, my goodness, I love this rally. Hold on here. Let's get this up here to see where we are here. And we'll get it up here in just a minute. Hold on just a second here. There we go. All right, let me try to get this up here to show you what I'm talking about. I was going to do this a little bit earlier, but I was not able to. So hopefully I'm just trying to show you what I'm doing as I'm trading and trying to do this stuff here today. I wanted to show you, this is my AI program for, usually don't do this, hold on a second, but this is important because I have an order in there. Hold on one second here. There we go. There's what I was looking at. You see we had a predicted high coming in here at that 104.30. It's had a nice break. Whether that means anything or not, I don't know, but that's neither here nor there. We're just, catching these things as they come and go. All right, let's move on here to talk more about, I covered the British pound. I covered the E-mini. Oh, one other one that's important here, really important, and we're going to cover this more importantly when we come back from the break, because this one is rocking and rolling, folks. Hold on a second here, and we'll get this up here also for you. I hope the charts are coming through well. Al, make sure, would you, our technician here, our man of the year, tell me that everything's okay with the charts that are coming in to the room, because I want to make sure that everything is good. Everything's good. Okay, we'll start out, and then when the break comes, we got to finish this, because this is right from the pyramids themselves, folks. You can see the ABCD patterns that are here. Bada bing, bada boom. We'll be right back. 877. What does that mean, Al?
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Capricorn. Okay, let's talk about the euro here, folks. You'll notice here we've had a perfect A, B, C, D here. There's your C leg, there's your D leg. Exactly at the right price in here. I mean, it was trading at 104.80. High low was 104.78. In order to prove that you like this stuff, folks, do this yourself. Pick this daily chart up on the euro, the most actively traded thing in the world, and you'll be able to see. Hold on a second. All right, I'm getting questions here. Oh, shucks, just a second. Now I got to change the chart again. There we go. Is this chart still working, Al? I'm sorry, I got to look here. Take a look. Anyway, just measure your distance in that pyramid, and then draw the low from the high to the low. Draw that in, and see that the days are correct. In other words, the days down in the move are correct in the ABCD leg. Okay, and there's a double ABCD. You can see the other ABCD that comes in at 105 and change. That's if you can't buy that, you can't buy anything. Right now, it's got a small profit in of $300-400, but now you're in a place where you're only risking. Let's see, it's 12 pips. You're risking about $150 to see if you're right on this. Now, we've had a whole bunch of others. I just pointed the one out on the British pound, and that's the same thing. That thing's been rolling over, really badly, and so that's why you want to, keep a close eye on that one too. So those are just a few of the things that we're paying attention here to today. So I think it's important to watch this one. Along with all the others. I mean, they're all important, as we all know. Okay, now let's move over. Tomorrow is hopefully JC Parrott's. That's still up in the day. And I've got to show you this chart, folks, because we got to spend a great deal of time on this one. This shows the relationship. You're going to love this one. Of all the charts I've ever posted, folks, this might be the most interesting one that someone sent me on the internet, and they asked me to explain it. Now, I don't want to be derogatory to anything, folks, but anybody that could make any sense out of this I think we have to give them a real present of some kind. I mean, it's supposedly all the swings from, I think, 35 or 40 years, what the percentages are. But how could anybody... I better shut up, otherwise I get into trouble. I don't know who the person is that made the chart, but when they sent that to me, boy, that sure makes a lot of sense to me that we're really spot on. We can certainly make some intuitive ideas of that. And, hey, I'm the last one to be complaining about stuff like that, but holy cow, that is just flat out really blows me away. So we've covered the cattle, and we talked about the euro. Very important in the euro for several different reasons. And if you'll remember, I'm going to show you both of them right now, because one of the things that we talked about in the newsletter over the past 3, 4, 5, 6 weeks is the fact that on this chart here, you'll notice that we were far above the 78% level. You see where the 1.618 was right in here, and how we stayed here for, well over a month, and then boom, going above that level sent us. That's when the euro was making that second ABCD pattern on the way down, and because the euro is 53% of the dollar index, and that sent the dollar index soaring. And the other thing that the dollar index was doing at that time, and I think it's important to pay attention because this is real money, and that is this chart right here. This was that same chart, only brought over in time, and it shows you on the weekly basis where we were, because we were breaking out above that number. You'll see we have just broken out, and now, folks, we are challenging the highs of 2 years ago up at 104. We're trading at 103 and change, and you can see what the euro's doing. I already pointed out it's a perfectly symmetrical triangles with an ABCD pattern. That's time and price squared together. But we're up into this area here, so this should be resistance. That means that the euro should be bottoming and the dollar index should be topping. Now, is it right? I don't know. All I know is the risk here is very small. So let's keep a close eye on this one as we watch this unfold for today. Okay, now let's move on to the next one over here that we want to cover, since we're in this area of this, and that is this Japanese yen on the weekly. I wanted to bring this up because we've been talking about this also for the fact that it had 130 written all over the front of the yen versus the dollar. And as you can see here, the dollar yen, the Japanese yen has just been melting down to the U.S. dollar, and we're way above here, folks. We're almost at 131 now, and that in itself is also something that would be pretty difficult to understand. So we want to watch it and see what's going on with some of these things here this morning. So anyway, let's move on to a couple others that look pretty interesting. Just give me 1 second. I have to check one other thing here. And there we go. Okay, I was having a nice rally in the old stock market here. We're getting the old up to 42.18. We rallied about 30 handles in the last hour or two. Going to be an interesting part of the day, folks. That's going to be what's going to be interesting, because hold on, let me a second, get this over here. Email. I've got to do something. Give me 1 second. I got to send this out here, and we'll get this up here so you can see it real easily. And there we move on to the next one here. Okay, and I want to get that working. Okay. All right, I guess I have to check the orders, make sure the orders are all working well. Okay, we've got to do one other one, folks, here on the yen, and give me that one, and then I'll be right back. And we're going to have Shane Smolian right at the break here, but I do want to show you the long-term weekly here for just a second. We'll be right back with Shane Smolian, folks. Stay tuned.
The gold market has taken off topside in a large way. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we have Shane Smolian, the wolftrader.com on the air. Shane, how are you doing?
Good morning, Larry. How are you today?
I'm very good. Shane, I would like to ask you a question. Would you mind sharing some information that you've been working on for quite a while with one of the major houses in Chicago about doing an automated Astro program? Would you care to share the details on that, or maybe at a later date?
I mean, I'll touch on it briefly today. I do webinars on Sunday about it to go into details, but we're starting an auto trading program. Essentially what that is just an automated trading system, and I can get into the details of that later. But okay. We're launching this in the next day or two now, so we are all set up and ready to go. And so that's been a real big focus of mine right now. But I think we're all set now. The pieces are in place.
Okay, let's go ahead. What do you have for us today, my friend?
Okay. So first of all here, I want to kind of go back to what we were talking about with the geomagnetic storm. Because that was really a significant event. This is the storms that come off of the sun, and they affect the Earth's magnetic field, and it affects the stock market. And we talked about this last time, that there was actually a study that came out that talked about, from the Fed, that talked about how this actually has a depressive effect on equities. And so when we looked at the market last time, when we look at the research here, it shows very clearly that the week after, or the couple of weeks after, is very bearish for equity markets. And so essentially that's what happened with the market. Once that storm passed over, that was the end of the rally for the S&P. So this is just a really important topic, because I think it ties together many of the aspects that we look at with astrology and seasonal patterns. This is a measurable event that we can look at, and it has an instantaneous effect, also a seasonal effect on the markets too. There's a seasonal component to this, where the solar storm activity increases and the stock market goes down. So this has a negative effect. Now, we have had this stellium going on in the sky. This particular stellium is 4 different peaks. And so the third peak here is what I want you to pay attention to. This happened back in March, and then we're into the fourth peak now. Now, if you go back to COVID, the market had a similar pattern, and it fell into the last peak of the stellium. I think we're replaying the same thing right now. That the last stellium peak is coming up around May the 1st, like right now. So I think we're replaying what we saw with COVID here. And then after that, there's nothing. There's no more stelliums. So I think this has been kind of helping to hold up the equity markets. But I think that, now this is the actual S&P now in terms of what we're looking at. I think once we get past this last stellium peak here, I think it's going to be really tough sledding for the S&P 500. And I think we are playing out this pattern. I feel like we've been on top of this pretty good in terms of this recent decline. So
wow, that's great.
Yeah, so that was just kind of a review of what we talked about last time. But let's talk about what's going on right now with the S&P. So S&P. So today, I don't know if you saw this. We had the GOP fell at a 1.4% pace. That was an interesting headline. That's the first time we've seen a headline like this since COVID, since the recovery. So this is really important. And I know they're chalking this up as noise, but this is important because this is the first print that we're seeing now of some cracks showing up in the surface. If we look at the daily statistics of the S&P 500, these are daily statistics that we look at. These are the days of the week. Today is statistically the worst day of the week for the S&P 500, and then tomorrow is also another weak statistical day. So we post these each day. We rank the days of the week. It's been strong on Tuesday and Wednesday lately. This does change, but right now we're coming into the next 2 days are pretty weak statistically on this. And then you can look over here and see statistically it really drops off. It goes from 69% on Wednesday, which was yesterday, and it drops down to like 30% for the next 2 days. So the next 2 days are statistically weak. And these are just localized patterns. I sent you this chart this morning. This was just an intraday transit showing what's going on with the S&P, but this shows a drop into around the noon hour and then a rally into about 2 or 3. So I just thought that was interesting. I thought I would put that in there because you were asking me about that. I don't use intraday transits too much, but they can be useful at times if you're trying to time markets. S&P 500 here, death cross. So we talked about this last time. We did get the 50 below the 200. S&P does this very impressive rally and then completely retraces it. Now I want you to look at something here. This is right when the geomagnetic storm comes in at the peak of this market here. So right here is where the geomagnetic storm comes in, and just right on the money, it stops the rally just like it has been. I mean, again, this research was published by the Federal Reserve of Atlanta. This is not just some random article. This was a clean research paper written, and so this is a real event. So this is where the storm stops the rally here, and so that is pressing lower here. NASDAQ also pressing lower. NASDAQ is much weaker than the S&P 500. And then when we get into what's going on with the Fed has ended QE. We probably have a rate hike coming next week, or the next meeting, whatever that is coming up in the next week. And then they're going to start running off the balance sheet. So there's more tightening coming here. We've been talking about this. This is the main chart that I share with subscribers regarding the Fed internals. This is one measure that we use to look at what's going on with the Fed on a day-to-day basis. You can see here that there's some important things here. First of all, let's go back here. This is what I call the Frankenstein rally. This was back into December, and then the QE starts to really taper down. You can see this pink line here. This is the Fed starting to really wind down on the taper. And then we get into this low into here. Now, this was the low here that has that big rally into March. But notice that the open interest on the S&P has been falling the whole time during this rally, right? So this gave us some clues that this rally was not real, that this was just a bear market rally, a flag pattern that was going on. This is the geomagnetic storm right here at the top. You can see that that's where that storm comes in. Now, after that, a very interesting phenomenon started here. Let me tell you what that is. So I make a list of things that has to happen for a market to crash, to come into a crash situation. One of them is the market has to start resisting the Fed. So here's the Fed trying to push this up here, and you can see that the market starts to fall here. So the Fed made an attempt to push this back up after the geomagnetic storm, but the market was resisting it. So this is a negative divergence. And when we see this, what that means is that the minute that the Fed rolls over, the S&P is going to roll over even stronger. And that's what we saw right here. So when I saw that resistance there, I was pretty clear about the fact that we were going to start a very strong leg down on this S&P. And to me, this is just continuing more of the same. I mean, we have just some really, really tough sledding ahead. I call this rally the Bride of Frankenstein rally. These are all just these are just monstrosities. I don't even know what they are. These are just fake rallies. This is not real stuff. The trend is down. The bear market is here. The thing I tell people too is that, one of the things is when you have a bear market, the moves come very quickly. And they come, and a bear market does not have the timing and the cadence of a bull market. Bull markets have nice rhythms; they're low volatility. Bear markets, kind of look like it was trying to fake out here, and then wham, 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 it starts coming straight down. So bear markets are a completely different rhythm, and this is tough. You can't time this stuff. When it's going to go, it's going to go. It's going to go quick in the bear market. All right, so that's the Fed. Not looking good, guys. We got a 0.5%, at least 0.5% coming. The Fed said that, and the markets freaked out. I don't know why, because the Fed has been talking about this for quite some time. But we'll talk about this when we get back.
Hey, we're going to take a break here, folks. 877-927-6648. Shane Smolian, wolftrader.com. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. We're chatting with Shane Smolian of wolftrader.com. Would you like to continue, young man?
Sure. We were talking about our Bride of Frankenstein rally that has failed here. There'll be more of these Frankenstein rallies. I mean, it's just part of the nature of the bear market. But there's so much coming against this S&P. I can't even put it into words. Let me just show you a chart here. I know this looks a little bit confusing, but it's not really. Let me tell you why I do this. These are different cycles. I like to put different forecast models on top of each other. It's very dangerous just to focus on one because you can miss what's going on. So there's four basic things here. The first one here is the Fed taper, which is this red line. And you can see that this is just clearly falling as the Fed tapers, the market is deflating. The blue line here, number 2, is the solar cycle, which is the annual pattern. The pink line here is the optimized Bradley barometer. And the fourth one here is the planetary speed index. So these are all really important things to look at, especially the Fed. My goodness, the Fed, if you just pay attention to what the Fed is doing, you can predict where this thing's going. But when the Fed is weak, the astro becomes important. So I want you to look back here. This is back into January into here. And so when we were back here into January, you saw that most of these cycles were going down together. You see this, Larry, how they're all kind of rolling down together?
Yeah.
And when that happens, you get what's called a superposition, where they all kind of line their vectors up to the downside. And then you had a weak Fed, and you had this really big move in January to the downside. Well, guess what? That's happening again right now. I don't have this out into June and July. I have that for subscribers. But you can see here in May, we have a vector lining up again here. You have the planetary speed index rolling down. You have the solar cycle peaking. You have the optimized Bradley peaking. And they're all surging down again here into May. So this is a very, very dangerous time for the S&P 500. There is so much going on next month. You have the Mercury station coming up. You have a lunar eclipse, which is going to be on the eastern seaboard in the middle of the month. And you have all of this going on. And the stellium is ending. And we talked about this, that May 1st is a really critical day, because if you go back to the COVID decline, that's how it played out with the stellium. The COVID decline showed us going down into that last peak, and that's what we're seeing now. So this stuff is really important, and this is why I try to look at the whole picture. You got to look at the global picture to understand what's going on. And so, and in these cycles, they each have tons of planets. I mean, combinations, you have hundreds of thousands of combinations here with this. So this is, to me, this is telling us the S&P has a big struggle here ahead, particularly in the month of May. This is like a hell month. I'm going to talk about this in the newsletter, but this is a really, really dangerous time for the market. So I have another chart here which shows some divergences. When we were going up here in this recent rally, you could see that the money flow was falling, the open interest was falling, the volume was falling. This was all weak stuff into here. Now each little bounce is very, very weak and very, very faint into here. So this is, again, this is not a good looking chart for the S&P 500. Even if you look at things like copper's getting weak into here. Copper is a leading economic index. Also, it's very important with the whole new transition to electric cars and batteries. We also track other ETFs. This is a Spider Biotech. This has been weak. This has been in a sell since 225 here. This is on our stock ETF. This has been in a sell on the Fed juice. So across the board, if you look at RK Innovations, the Fed juice has been in a sell since February the 10th. February the 10th has been in a sell since, and it's still tracking this beautifully to the downside. Apple, I got double lunar cycles on Apple here. The double lunar cycle on Apple is just going into another sell today on 428. And this has been tracking Apple very well too. So it really, when you look across the board on this is not a good sign. This is not good. I mean, I'm looking across, I can't find anything here to get excited about on these markets.
Mm-hmm. Wow, I know, it's really amazing. Listen, I want to thank you for joining us today, and tell us when the webinar that folks would like to maybe set in, and when will that be on Saturday?
Sure. So I do a webinar at 1 o'clock every Saturday. I will probably do a global view of markets. I'll go into more detail. I'll talk about what we talked about today, but in more detail. And then, so every Saturday we show up with a different topic. Some days we talk about like the geomagnetic storm. Some days we talk about the S&P. Some days we talk about Bitcoin. Speaking of Bitcoin, do we have a few more minutes here?
Yes, we do. Fire away. I'm glad you brought it up, because I was going to ask that question.
So what we've been doing is we've been tracking. So let's talk about store of value for a second. Everybody's obsessed with Bitcoin or gold as the store of value. They both look pretty bad. I mean, this is a spread indicator that I have. This is the Bitcoin versus gold. So I have a spread indicator here that we're doing to track. Right now it's saying Bitcoin is a little bit stronger, but you can see they both look pretty bad. I just don't feel really good about either of these, to be honest with you. Usually when we have an inflationary environment, you have a weak dollar. But now if you take a look at the dollar, we have a strong dollar. And so I feel like the U.S. dollar is the forgotten child here in terms of store of value. Like, we're so busy arguing over Bitcoin versus gold as store of value. If you look at the U.S. dollar, it's been going straight up in this bull market, and it's been modeling very well here on the Fed use. So this has also just been tracking this U.S. dollar up. But this U.S. dollar is having a depressionary effect on gold. But I think gold and Bitcoin are both in trouble here. I think that when the S&P goes down, when we go back to 2020 here, Bitcoin leads. So Bitcoin has turned into a risk-on asset here. And if you go back, this is 2020. This is COVID back into here. But going back here, Bitcoin led the way down. And so I think that's happening again now. So Bitcoin's leading down. The S&P goes down. And there was also a period here where gold went down with Bitcoin. I think we're going to see that, Larry. It's a kind of a rare thing to see. But I think once the S&P starts really, really heading lower, I think we're going to see all three of these going down together. And then our friend, the U.S. dollar, will likely continue to strengthen.
Wow. Okay. That's really cool. Man, I think Bitcoin is finally, people are realizing with all these financial institutions that are following it and, bringing it out in different ways, that it's not a bubble of any kind. It is blockchains are here to stay. So I'm pretty sure of that, but I don't even understand what a blockchain is. So, hey, listen, I do want to thank you for joining us today. We'll have you on again soon. And as soon as your program gets started over there in Chicago, I think the folks would like to pay attention. That's on my bucket list. One of the things I'd like to see is sometime in the near future where they have a special segment on Bloomberg or CNBC about financial cycles related to astrology. And then they'll talk about J.P. Morgan and all this other stuff. So I certainly hope I'm around to see that. So thanks for joining us today, wolftrader.com. And we love you, Shane. Keep up the great work. Okay, pal?
Thank you, Larry. Thanks, everybody. Have a great weekend, everybody.
Okay, folks. Let's we got a break coming up here pretty soon, but pay close attention to a couple of these things today, folks, because if we close sharply lower today in stocks, I know it's a little early in the day, but if we do that, that's going to be a very, very interesting reversal, and then mainly because of this chart that I sent out last night, because it had, if you like patterns, and this certainly had just about every conceivable pattern that you could ask for, is this ABCD that we had, double ABCD had up here at 52, 42.52, and we're a little lower than that right now. Hey, let's take a break here. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The gold market has taken off topside in a large way. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Okay, folks, I posted a chart here that Mr. Z talked about earlier in this week. We made this price objective down here within a penny or two of that actual low price in the copper. We had a pretty strong rally coming off of that. I think we missed it by about 3 cents. I think it came in right about here, completing the ABCD measured right to here. The 618 was right there. And we had a pretty good rally coming off on the copper. So that was probably related to the rally that we've seen here the last couple of days in the stock market. The important number to watch, folks, from my standpoint, is to watch the low of the day today in the Dow Jones E-mini. Also, you can watch the low of the day in the E-mini S&P. Watch those lows, because if those lows are taken out and we close below that, that is going to validate that pattern that we had on that S&P up to that level at that 42.52 level. Now, if those of you that are in that, we've definitely locked in $1,000 profit on that at 42.32. So if it gets to there, we'll just take the $1,000 and say thank you and move on. Otherwise, we'll wait and see if the market's going to go a little bit lower to that part. I haven't validated that Mr. J.C. Parrott's is from the All-Star Charts will be on tomorrow, because he's really swamped. He's going to let me know today, and we'll see if that. If not, then they've got a couple other things that we can handle tomorrow. We've got many things happening in these foreign currencies. Keep an eye on that euro. If we close badly today, folks, that's going to be really bullish to the U.S. dollar. Anything below 104.60 in that euro would really tell us that we're heading far, far lower in the euro and going much higher in the U.S. dollar index, which is not good for gold. We're looking for gold come downing around the minimum of 1862. We had a low of 1876 so far, but the real number that we're waiting for comes in right below 1800, right around 1776. A good year, I might add. So listen, folks, live every day in an attitude of gratitude, and may God bless. And please do something nice for your neighbors or people that are in trouble, because you got to do a little payback in this world. If you've been lucky, like we have been, we certainly try to do that. Even if you can't give, monetary things, give your time or support, whatever you can, because it's a great world out there, folks. Live every day in attitude of gratitude, and may God bless. We'll see you on the flip side tomorrow. Amen.